Hello guys, I'm Mariano. I'm the Chief Market Strategy here at the Trading Parrot. Sorry. Roll back. Hello guys, welcome to the Trading Parrot. We are producing here a pattern that is extremely interesting on the 4 hours. And I'm gonna give you 5 seconds if you can spot it on the screen. 1, 2, 3, 4, 5. Inverse head and shoulders in formation, 80% completed on the 4 hour. In today's video, I'm gonna talk about the potential target if we manage to break above the neckline. I'm gonna tell you where is the invalidation that instead of sending us to Valhalla, we could go down enough so I can fill my second order. Guys, if you like this type of content, make sure that you are subscribed to the channel. Hit that notification bell to get notified every time I put out one of these videos. I am in a quest to get 1,000 likes. It seems like the impossible, never endless goal. One day we'll get there, and that is gonna be thanks to you. And once we do that, we're just gonna grab the YouTube algorithm, punch it in the face, and start showing all this content that I prepare with so much love and passion to a lot of more people. Can you help me get in there? Let's do it. Today's video is gonna be compact. Today is Saturday, and I'm gonna focus on the ending of the week, the CME, the shorter time frames, the progress that we are doing, that potential breakout, the levels that invalidate the breakdown, and a lot more. Tomorrow's video is the Sunday Alpha special. The Sunday Alpha is gonna contain all the alpha from the week, from the weekend, and is the best way to prepare your trading week as we start with Monday, market open, the reversal in the middle of the week, and all of that. Make sure that you don't miss the video tomorrow. Remember that all my videos have timestamps down below, so if you are not particularly interested in something, you can just go ahead, check the description, skip to what matters to you, and that way we are all happy. Right, yesterday we were at minus 22%, and we managed with this final rally before the candle close for February to close at minus 17. That is definitely way lower than the average. The average of February tends to be well in the green with 14%. Thanks to this close of minus 17, we lost 1 point on the average. The average used to be 14% if you pay attention to my previous videos. March now is barely 1%, and people are debating across social networks whether March is gonna be the month that we recover from this, or if we are not gonna recover, and if we do recover, whether it's going to be April, possibly. The debate is coming a lot based on the global liquidity, how long it takes its delay effect to bring Bitcoin back up. They also mention that it's been the liquidity M2, the one responsible for pushing February down. Tomorrow's video, we are gonna cover the hash ribbons, the liquidity, the Federal Reserve, and all of that really matters, but today is gonna be just this. So let's go into the 4-hour time frames. Paying attention in here with these horizontal lines, we have the 91, we have the 86.7, and we have the 83.7. Each and one of them tried to break above the previous one, and it failed. This one failed miserably, getting just to halfway through towards the target. The second time we touched it, we did 100%, but we saw a rejection. And the third one was the charm. We managed to break above it, to hold it, and to go 2 levels up. So good for the third one. There were 2 consecutive bullish divergences that now my indicator, the RSI VIP, is showing in green on the low end. We can see now a little bit more clear the formation of this channel pointing to the upper levels, and you can see how we pick momentum in here. The first momentum was small, then a larger one, and a third one, the largest so far. We are at the moment battling with the resistance of 86.7 that was previous support. It was resistance once, and it's the second one that is resistance. But thanks to this resistance applying twice, we are starting to form an inverse head and shoulders. This was the collapse into the CME gap, and now we are seeing part of this rejection in here. What we need now is to come anywhere from where we are. That could form a shoulder like this, or it could form a larger shoulder like that against the 83.7, or it could even form a slightly larger one based on the wick that we have at 82.4. Whichever of the 3 that we do, as long as we come back to the neck of 86.7, we can measure the total high of the head and place it above the neckline. And that has a technical target of 95.147. And if you remember, here at 94.8 is more or less where we had the support that held all this period of sideways, where I was pretty much moaning every day that we are not going anywhere. Remember? So a rally like this, and I'm not saying necessarily fulfilling 100%, even if we get just to this fair value gap of 93.2 or the much more conservative fair value gap of 91, which is already a tough level right in the middle of this whole potential bullish target, that is really going to be tough, and I'm going to show you later why. But let's be optimistic and just imagine why this makes sense, and then let's start challenging it. Let's see how many stones we have in the way that could spoil the rally, and let's remember as well that the pattern hasn't been formed. So let's remove these lines and let's appreciate that we are still there. We haven't come back to 86.7. Second, we are in the middle of a weekend. So if we started the rally at 86.7 today or tomorrow, watch out for that volume, because a rally with low volume could easily do something like this, maybe fill the first value gap and then take out the neckline and fall to this fat fair value gap. And that is my worry, because if we did something like that, if we go beyond 86.7 and we come back below it aggressively, that means it's a trap. I'm not saying on the weekend it's impossible. I'm just saying it's a lot more risky and you need to treat it with caution. Be ready for a potential rug pull when there is low volume. From the point of view of the RSI, if there was a rejection like the one I mentioned now, or if we cannot manage to complete the actual inverse head and shoulders, which is also possible, and we start coming back down into further than halfway through the fair value gap that we have in here. So let's say price now sees this rejection, and instead of curving back up, it starts losing the first, the second line of defense, the third line of defense, and it starts coming beyond it, takes the fair value gap. At that point, we are just pretty much 150% sure that at least this pattern is not gonna play out. And at that point, we need to start asking ourselves if this is just gonna take the previous low, given that in here, there is a decent liquidity. So if it bother to come all the way down in here, why not as well bouncing and then hitting it by Monday? I mean, all it takes is for certain political strong personalities to continue opening their mouths, saying things that spook the whole planet. So in yesterday's video, I mentioned that we need to continue defending this channel to the upside. I gave us all that particular task, and there is a small annoying problem at the moment. If we had a rejection or an invalidation of the bullish case following the criteria I just gave you 100%, and let's say the RSI starts following the price action in here, and it comes to 27. 27 is the level I say is the last line in the sand that we need to defend to protect the upside of this channel. But there is this problem. We have gone so high, even outside that channel that we define with these two pivots, that now, as a consequence, the RSI is going to punish the price for having gone so high, and a test of 27 is pretty low in the price. That's the way RSI works. So an RSI of 27, a retest, still defending an upside momentum channel, takes the price to 75k. And as I said, 27 RSI at this point in this candle was at 80k. When I talked the last time, it was at 81. And with this big green candle, the RSI always runs away from the price. Therefore, the target went straight to 74.8, and it's been hovering. Now it's at 75.2. It's a moving target. Tomorrow might be something different. You can always copy my charts from the tradingparrot.com/charts if you want to monitor them. You can do that. Make sure you watch my tutorial that I put out. Just go to my YouTube channel, scroll down and go to trading tutorials. This one that is called My Charts, Get Them All, is the one that you want to watch over the weekend to get your setup, to copy my charts, to be able to monitor them at all times. Remember that it's a combination of indicators that are part of my subscription with third-party ones that I use together. Just in case you wanted to get them all, you don't have to. You can just stick to watch the videos if that's your preference. So as you can see, and this is really crazy, if we complete the inverse head and shoulders at 86.7, that has the technical target of getting us pretty much from 85 to 95. That is almost a 10k target, pretty decent. And if we fall from where we are, we have a downside of 10k as well. I am in a long, so if I manage to get anywhere 93 and I see weakness, I close my long, or if we get to 95, I could reduce as well. I am with an average right here at 87.1, so that still can give me up to an upside of 8%, but since I'm doing a 2x, I can catch up to 16% from here, assuming that that's the final target. Of course, this could rally a lot higher. For that, watch my video tomorrow, because we need to look at the general markets and if that makes actual sense, or if we should be just looking for dead cat bounces from here. Again, watch my video tomorrow. We are going to look at the monthly and all of that. We're going to have to clean all the dirty dishes and wash them all. It's a huge mess after this pullback. So where are we on the daily as well? On the daily, we broke the red line support that is support since August. That has been the support for the past 3 impulsive moves out of 4 that we have had in this bull market. 1, 2, 3, and 4. So this has been support from 3/4 of the bull market. So please be respectful with this line. And at the moment, we are below it and we are approaching 31 daily RSI as resistance. 31 in the price has already been tested 2 times, on Thursday before falling back down to 78, and today we went all the way to 86.5 as I can see here, and so far is holding us. So very promising if we cross the 31 and we hold it. It's a mixed bag because I really don't want that to happen over the weekend because of the additional risks of rallying with low volume. The risks are of a literal rug pull in the middle of the weekend by Sunday with additional downside on Monday. I mean, we've been there so many times, so this is not new at all to us. And on the daily, if we cross the 31, there are a confluence of 2 targets in here. So let's move on from the 4-hour. Let's park those numbers there and let's see where we can overlap or where can we average certain targets to see if they make sense. On the daily, we are trading on this range from 104.5 to 91k. That was the previous range, right? We lost it. So now we went to the equilibrium and we are bouncing in here to the middle of this new range in here between the equilibrium and the lost support, and that support together with an extension of this widening triangle is giving slightly below 91k. So the daily is saying watch out for a rally like this to the scene of the crime of the lost support of the range on the daily for a rejection and potentially moving back down in here, and maybe, just maybe, we could be forming a ranging period in here. I'm not saying never here. Remember, we call this 1. I think 2 is somewhere in here and 3 is somewhere there. I don't know what's going to be the range. I don't know if we were going to recover above 91k and hold it, but you know, that's the way I trade. I trade with uncertainties. So the point is recovering 31, keep an eye for that 91. Admit that it is a tough level because it held us from November up until end of February, okay? Tough level. So on the 4-hour, that 91 must be there and is actually the equilibrium as well. So going into there, the 4-hour already acknowledges as a significant one. We have a fair value gap right before the last one at 93 before we complete the full target. All right, we are fully informed with daily and 4-hour. We have a plan. We understand when things break. We understand how high we can get. We understand the risk of the weekend. Let's move on to the weekly. The weekly is showing strength after hitting the technical target and slightly below. Now we need to watch out for what happens below the bull market support band located at 89.4 into 91.6. So we got another confluence there to again put another check mark on 91 that we are not goofing around when we get to that level. We have recovered the weekly above support. That is positive. It's always good to get above the support, but today is Saturday, so there's still still one more day for breaking down that support potentially. And I'm gonna stop here on the CPR because it's 1st of March. We have new pivots, we have new 3 levels of resistance in green, 3 levels of support. CPR is not just here to give us the actual valid range, trading full range for the whole month of March, but it's also going to help us to anticipate using the leading aspect of this model, which is to know what happened in the previous 1 to 2 months and to help forecasting what could happen in the upcoming month. In this case, March is just starting, so very time sensitive information. Tomorrow in the Alpha Sunday, I'm gonna have to repeat this because it's that important. So let's observe what happened in February. We had the full month a huge challenge against the pivots. In the month of January, we managed to touch the first level of resistance, and that was forecasting that in February we were going to also touch the first level of resistance. So in that way, we can say that the model failed in February forecasting that. In February, we started the month immediately touching support, this red line at 91, and that was already a bad sign for March. Things moved very quickly, and during February, we already had the effect of that by going again into that support and even getting into the second one. So now focusing on these new lines, and you can see these lines that I left in here, those were my forecasts of where are we going to get the pivots. You can see that I got it very accurate. I got really good at forecasting where is the next CPR level, and I encourage you to do that because that is part of being good at forecasting direction. And by seeing the pivots here in the middle, 86.2, 85 to 90.5, is telling us that we start the month already from the bottom. It's not a virgin month because we have already touched the pivots. If we went down straight without touching them, we will have a wild card there for coming back up, because pretty much every month, 99% of the months, we touch once the pivots, whether as resistance or as support or for breaking out across them. In this case, we have done that job, so we cannot use that wild card, but what we can say is that the previous month we touched the red. So we start March just looking at this model, ignoring liquidity, ignoring everything, politics, war, whatever. The model says that we should be due at the very least in March for touching the first support once. Whether you like it or not, that is what the model says. And the first support is at 74.1. We have already touched the pivots and we are struggling to get beyond it. Ideally, to invalidate that, we have to do one thing. We have to cross beyond 90.456, which is the third pivot on the top, and we need to manage to get to the first resistance at 98.8. That's a really tough goal for March, given that we have been struggling all February to even cross beyond the pivots, and we have already touched the second pivot, so not the second support in red. So it's gonna be an interesting one from the point of view of CPR. If you want to learn more about this model and you really don't know what I'm talking about, again, it's always the same answer. Go to my channel, scroll down to trading tutorials, find the CPR, do yourself a favor, allocate 20 minutes, or maybe just go to the toilet, tell everybody that you're gonna take very long, grab your mobile, watch the CPR, and do something useful with that time that is very unproductive. Yeah. Let me know in the comments what you do during that time, whether you scroll TikTok, you look at your charts, you enter deals that you shouldn't be entering, or if you watch things that we cannot talk about in this channel. Right, let's go to CME. Let's see where we close on Friday. That is absolutely relevant for a Saturday morning. What else can you be doing on a Saturday morning? So here it is, the most hated CME gap of the week, from 77.995 to 86.45, priced in CME. Priced on Binance, we get 77.324 up until a leftover that spans to 78.284. That is what is left at the moment. And now that I look closer, it's not just $600, but around $1,000 that is there not taken. At least when I look at Binance, it's really tough to calculate it, really, because on CME it's looking like it's less. It looks like $800. Anyways, give or take around that number. Problem is over the weekend, if we were to collapse and go down to close that gap, technically it's not going to close because Chicago Exchange is closed. So whatever orders that are left, that are the main driving reason to go there, that act like a magnet, they won't get filled over the weekend. So technically those orders are still there, no matter how many times we go over the weekend across that range. So ideally, we want to go to those levels during the week. Now, of course, no one is thinking about this scenario. Over the weekend, crashing to 68, and then from there, having still the gap above the price to bring back the price into 78 to fill that gap. I'm sure it's not something that you want to be thinking today, but just a crazy thought. On the top, we have a gap that on CME starts from 92.745 into around 93.645. On Binance is 92.6 to 93.7, around 1K again, but this time it's actually helping the price to fulfill the 4-hour target that we were talking earlier. Right, monthly held the RSI support. We close February with this doom signal of a bearish cross on the stochastic RSI, so that is there on the table. Unfortunately, we are going to have to live with that. We're going to have to trade with a lot more caution from here. We have never ever survived in a topping year to go to the middle of the range in a bull market, and then after that in a topping year, which is 2025, to produce a bearish cross anywhere. It could be here, it could be there. For example, in 2013 we went to the middle of the range on 1st of August, we put a bearish cross December 2013, and that's it, bear market from there. This cycle 2017 is too perfect. We had a bearish cross, but there was no middle range ever in the whole cycle, in the whole topping year. That's what I mean. This bearish cross in here, we survived, but that's not a topping year, right? That is in the middle of the COVID crash. The actual topping year is 2021, and we went beyond the middle of the range, and we had the bearish cross at around 25 in the stochastic RSI. That was enough to call it and to say we're going home. Bear market. This cycle, we went to middle of the range in October, bull cross, bear cross in February. So I can take longs. I'm okay with taking longs, but we need to be very careful. Look at the bull market when it ends in here. You have to be very careful on how you average down to be able to exit on dead cat bounces. And having that stochastic RSI and at the same time having all this liquidity coming into the system, which is not a lot but is consistently now going up, makes it a very tough situation because Bitcoin now needs to invalidate the previous performance to really put a new all-time high from here. Alright, a few signals that are also time sensitive that I need to include today, starting with the open interest oscillator that once again is below the orange line. Every time that we go beyond the orange line, or I should say more than 90% of the time, once we find a bottom and it starts curving back up, like you can see on this end that we have already done that, it's calling for a bottom. Indeed, I have it in my dashboard on CryptoQuant. This was developed by Axel Adler Jr. together with many of the other charts I'm using from CryptoQuant. I find it brilliant. So be aware of that. You could argue that it's already kind of playing out with the move from 78 upwards. This is not a signal to just go and dump a deal at any range. Of course, I will never do that, but it's resonating with the upside that we are currently having. In terms of drawdown, you can see that the drawdown has already started curving back up, similar to these bottoming areas in here. In the previous range where we were trading between 73 and 49, we have those drawdowns, and this again resonates a lot with the previous drawdown. Large holders haven't done anything significant. They continue to be at the areas of accumulation. We are below the short-term holder realized price, which means that short-term holders from the past month mostly are the vast majority that are closing at a loss at the moment, and there's still plenty of them that are underwater. I also wanted to mention that yesterday I published on my Telegram, Instagram and Twitter this initial green signal. That is because we pinched the lower band of the SOPR. We came back up, crossing it from below, and we did the same on the blue signal with the white line. So maybe I'm getting it the opposite, but the whole point is this is according to percentile percentile calculations of 1 percentile, we are very little time spent below these bands in the SOPR. What is SOPR? SOPR is very simple. If the blue line is at the very low end, it means that people are mostly closing their positions at a loss. If the blue line is at the very top, they are closing their positions but mostly in profit. Doing it at the low end is a signal bullish. As you can see, overlapping this area, people closing at a loss, price recovers and goes to all-time high. Just a silly example. And when you pinch the top, the price corrects because people are taking too many profits. It's very simple. So I want you to be aware of this. This is something else to overlap that could help driving us back up for that 4-hour target. And another good signal is that finally, after so many days of red, well, along with the 14th of February where people probably bought Bitcoin to give to their girlfriends, but with that exception in mind, we have a sea of outflows of red on BTC, Ethereum, and Bitcoin spot ETFs. And on 28th of February, the last day of the month, they actually bought some Bitcoin. Now, it's kind of a mixed bag because if you notice, BlackRock in here had an outflow of 244. So that means that they continue to do this, which is pretty annoying. And you can see that now we are getting with the curve almost to the previous highs at 36,000 from the highs of almost 41,000. That is almost a 12% drawdown, and in all this area in here in 2024, drawdowns were around 5 to 6%. So at the very least, that is doubling that drawdown. The extreme fear is now at 20. We visit the 10 during this week, which is bear market territory kind of fear levels. Some people interpret it as having a full reset big in the fear is something good. Well, I encourage you to go to the website and see areas where we go very low. This, for example, is COVID at 12. This is bull market. And the first time that we hit these lows, here we have a 10, and that was in June 2021. After that, we still have an all-time high. This 11 in here in June 2022 is bear market. And the lowest we have had since the bottom of the bear market was previously around 17. So this is taking down that lowest level. Let's look at the liquidity. Here is where we can also assess the chances of the 4-hour target to get fulfilled. At the moment, we have some interesting liquidation levels at 87,395. That is slightly above my entry price, so that could put me back into the green. Right after that, we have this cluster, which is lower than the previous one, but is a little bit wider. So I suspect that in total is more than the 87, and that is between 89.4 and 90.5. Remember the 91. The 91 is around here and is precisely in this depression, and it's a tough one because liquidity can attract us up to 90.5, and at the 91 there is not much going on unless we cross 91 and we manage to get to 92, where we again get some reward for achieving that. And I'm talking from the point of view of a market maker. Of course, you want to be with the mindset of a market maker, otherwise you are with the mindset of retail. Do you really want to have that mindset? They hardly ever close in profit, or they take a lot of small profits and a big loss one day. That is kind of their personal preference. And you can see in here that liquidity from 78 from the moment we had the reversal. Of course, in there they went all like crazy entering on longs on the CME gap. For that, the price needs to move down 7k now, and to go into all this liquidity, it needs to go 5.5k up. Below it, we have the 75k and a very juicy at 74 in case this ended up turning just into some sort of bear flag. I can see it is possible, so that's why I haven't ruled it out in my analysis on the 4-hour, and that's why I'm giving you that recipe to distinguish when things break. When the 4-hour starts shouting at you, you are at the wrong side, we could take a new low, we could short from there, hedge, for example, if you are already in a long. So longer term liquidity, we have done 1.5, we could say, because we took 1/2 of this hill, and there is the second half of number 2, and there is all 3 that at the moment is a nightmare for a lot of people, thinking that they have their risk right there. I am not in that situation. I don't have my risk in number 3 because I'm trading very conservatively. But if I was in that situation, if I was life and death situation and I have to protect my portfolio, I will be looking into all this upside to find an area to to start a hedge position to reduce, to minimize the risk of going down. The downside of that is if you are not really prepared technically or emotionally to do that right, and I'm leaning more to the emotional challenges, which are always bigger, you might enter with that short and then the price continues to go slightly higher, and then you take a loss with the short and then it still collapses, and then you make a huge mess. You end up grabbing your laptop and it ends up flying through the window. We don't want that in the first place. Do not expose yourself so much in a topping year. If you are late to the party, you are late to the party. Don't stretch it so much. Liquidations last 30 days. At the low end we have 81.82, an immediate one at 84.4, and then to the upside up until 87.9 we get a cloud there. Then we have a second cloud from 89 into around 91. That's where we get this depression that goes very low there, and it starts increasing once again into 93.3 and a 95, again another depression. So those two depressions, the 91 and the 95, are our challenges to get for the full target of that inverse head and shoulders. You can see that people have already started getting liquidated with over $1 million with shorts. You can tell what we left on high block capital is right there in the yellow. In case this is a rejection, hopefully I can fill my order right there. If not, I just continue trading with the volume I have. I don't add at this point. Funding rates got negative right there at 80k, and that's why I find extremely valuable to have access to this sort of data in a time sensitive way. I know that high block capital were planning to implement alerts. It still says coming soon, but I am begging to get this in an alert format into my email or Telegram, because funding rates overlapping negative with the green of too many longs, with extreme fear, and with a bidding that goes into 30 is a beautiful setup. Unfortunately, the signals are not perfectly overlapping, so having some sort of alert that combines all of this in a short time frame will be the best choice if someone asks me how to do it. At the lows, we had a peak of 1.32 million in delta of liquidations of short-term on high block capital, that you should be wondering yourself the basic question. With this move up, how much have we taken out from that? Consider this sea of red as petrol in your tank, in your car, to get you to the upside. So when you start seeing that you're running out of petrol in here, or when you're getting close to getting less attractive to continue going up, you should slow down, release the gas, reduce your position if you're swing trading. Very simple analogy, try to keep it in mind, and whenever you see these increases, tell yourself, wow, got a lot of gas in my tank. Oh, how much we lost? And we have lost from 1.3 to 900,000. So that is a reduction of 400k, significant, but we still have, we could say, 2/3 left or a little bit more. So this doesn't necessarily need or must stop right here, or is in big risk of stopping here from the point of view of that indicator. I want to see the ask liquidity is at 0.08. It has been that in the past enough to stop and to damp the price, but we are starting to see a shift in the trend. And if we go to FAR charts, you can see that they are getting quite cocky now, the longs protecting the upside. You won't be able to notice what the hell happened in here. Even if I zoom in, it's difficult to tell whether this was support or resistance. So let me go into the 1 day, and you're gonna see that that liquidity was actually support. Price went up here to 85k, and when it came back down and it met 83, there was a huge order. And I remember seeing someone on Twitter saying this, because I didn't catch this on time as I was busy, but you can tell that the liquidity went straight there to protect the 83, and there must be really something wrong, because this amount of liquidity is just unbelievable. This must be manipulation. I don't believe what I'm seeing with my eyes. This there says something sensible. $117 million makes sense, but somewhere around here it says 1.860 million. It's million. Okay, makes sense. So it started increasing into 120 million around there. So that is a lot more typical, and then it decreased and then it left. So they wanted to push the price slightly higher, probably to get some people liquidated, and you can tell that they managed to do it. So key takeaways from that is that support is no longer there. Yesterday we have a bunch of signals that were quite bullish. Number one was the net versus longs, that we were in an area of value. I already mentioned that. We spent some time even below the line. That was signal number one. Signal number two is typically with getting a liquidation of this size below my green horizontal line. That is a signal of we are about to see a local bottom. That's alpha number two. And alpha number three I gave you yesterday. And remember, when I give you alpha, I give you the alpha. I don't tell you what to do. I'm not gonna give you alpha and tell you buy. I mean, an alpha can fail. Why would I do that? I will get in trouble. I will get an army of idiots the day after telling me, you gave us the alpha and it didn't work. You told us to buy. Why would I do that? Putting myself in a situation. I've been there. I'm no longer interested in that. Thanks so much. That is another alpha, the alpha of seeing a cloud of interest that spans from 78 to 69, with levels of 1.5, 1.3K. All that interest, I told you, that rarely gets touched. And if the price goes there, they pull out. But it generates a psychological effect of, I'm gonna miss out. I'm gonna put my order slightly higher to not let the other guys feel it, because I smell a reversal from here. That's kind of the general sentiment. And the fourth and last alpha is we need to go to the VWAP, to the median. At the very least, at some point, we've been just falling, and the VWAP religiously gets pierced very frequently because that's the median. That was at 86,383. That's where we went. That is our current resistance at the moment. Perfect. By the book, median. As we go up, we took the first fair value gap. We have fair value gaps at 83. We covered that one in the 4 hour already. If we come in here, I'm happy. I feel my order. I am not happy if we start going to 75, 68 for the sake of having more bull market. If we go to 68, 69, things start getting a little bit gray area, much more than where we are. We can get out of that still in a bull market, still an all-time high, but it starts becoming a lot more blurry too. And here is our journey into 95, consisting of challenge number one after 91, challenge number two after 95. Those don't have fair value gaps, but once you get one and you start entering in the second one, it increases the chances that you take it all. Not guaranteed, but the speed of the price there tells you that you can go through that because there's no much structure, no many orders that the traders manage to put in that area of speed. Therefore, when the price goes in the opposite direction, it tends to cross it at the same speed. So take away, pick your poison, 91, 95, and monitor for pattern not completed, and monitor for breaking out over the weekend at low volume and get it rug pull into the fair value gap at the lower end, and cross your fingers that we go to my area of buy. By the way, last week I shared that on my Patreon, my area of buy, to keep you informed. If you want to sign up for my Patreon and support my channel, that is fantastic. It's just $10 a month and you get updates almost every day with charts, levels, altcoin levels, and all of that. No financial advice, not guaranteed that I'm gonna publish X amount of trades in the month, but you get to hear as well my thoughts in your email, and people seem to be very happy. I use those funds to grow my team, to get someone to edit these videos, and to deliver better value for you. So it's a win-win. Another way that you can help me is to open an account on OKX using the links in the description, claiming your rewards of up to 60,000. That link as well reduces the fees to the minimum when you trade on OKX. That is my preferred exchange. At the moment, I'm using OKX and Bybit. What did I say? Forbidden Word. Binance. BitUnix and Bluffing are great exchanges as well. The upside in here is that they are not KYC. No need to go through that process. No need to set up a VPN, and you can have as many accounts as you need with different emails as well. BitUnix and Bluffing, both of them are running great campaigns. On BitUnix, pretty much with any deposit and any trading volume, you're gonna get some decent bonuses. And on Bluffing, you can even get a Model 3 Tesla from an Apple Watch as well. Have a look at the links in the description. That really supports the channel. I'll see you in the next one tomorrow. Don't miss the Sunday Alpha. Don't do that to yourself. Bye bye. Hey, hit the like, subscribe, write down a comment. Now you can enjoy your Saturday. Bye.